I'm not going to go back through that other briefing again, but Canatorvis Capital, Nightly Strategy Podcast. Trying again. All right, so the question was from Griff. Is it possible to move your stop to no lose plus dinner for two too early? By math, if your risk is 400 and you get 100 when you move to no lose plus dinner for two, then I'm waiting until I can move the stop to lock in a quarter of an R. And then I always thought to move it up quicker than that. It's a matter of personal preference, but there's a couple ways to think about it. One is to say, I had my trade frame. And price opened and started moving me up in some fashion. Case number one, just trail it. So there's my risk. And as this thing moves up, at every segment on the curve, I always just have my one little risk box and I'm trailing it. And then when I get to that magic moment of no lose plus dinner for two, that just means that it moved it had to go plus 1.25 of my execution risk, because then if that's a quarter, then it moved a full risk box up, which leaves me at plus 0.25. So the trailing stop avoids that question altogether. Did I move it too early or too late? The real question you're asking, though, is from the moment of entry, we've seen plenty of times in which you might get you got your entry, this thing moved up and then came down and then took off. We're going to see that today with Twitter, which was a 30 plus R trade. And so now on this one, you say, well, if I move this to no lose plus dinner for two fast, then that's hit. And then I don't have a plan to re-enter. And then I miss this trade here, then sad face. Oh, I must have moved too soon. Because in retrospect, only after the fact did I notice, oh, this great big move. But since I couldn't know this, you're not allowed to come down here and say, oh, I moved it too soon because I saw what the next big move was. That's not fair. So the second way, again, we might do this is that sniper. I watch the price action and then I just make a decision to move it into position and then take my stop, and then move my stop to there. And then you can say, oh, should I have waited to this long? Should I have waited to here to move it to no lose? Because then I could have had all of this heavenly glory. Then I didn't move it too soon, right? But one of the things that we know is that in the early stages of these pattern trades, there's a real likelihood of this thing moving against us, but then getting traction and taking off again. So the question is, if I ever move it from my initial stop what happens if it comes back, and how do I? So the answer on there is you have to have rules for reentry, which is the key to sanity. So you just say, well, it moved. I moved my stop the way I decided I was going to move it. It hit the stop, and then shortly thereafter, I re-entered. No big deal. That's absolutely routine. So re-entry is the key to sanity. As long as the original trade frame is still in play, and especially if the original risk never was hit, if the original invalidation of the hypothesis, which was this, that if I entered here with a stop down at the red line, this thing could get up here to the 2 units of reward for the 1 unit of risk. As long as this original stop was never hit, a re-entry is always legit because you're still in the same trade frame, and all you have in here is a period of maximum noise. So a third way we might do this is the PSAR trailing stop, because the PSAR is the way we have it tuned is pretty key, is keyed into the recent price moves. And so like on the SSC, we had some kind of declining thing, and then the PSAR flipped, and then we got the price move in our direction. So we took our entry. As long as this thing is going up, then the PSAR is going to trail it at some distance that's geared towards, it has an acceleration factor each time, but it puts a limit on that. You know, if you had a parabolic move up, then a trailing stop trails that and gets parabolic too. But a PSAR stop lags because there is some limit to how much it can accelerate. So the PSAR tends to be a little bit wider. Now, you actually like the acceleration in a PSAR. Why? Because more often than not, we don't get parabolic moves. We see things that hit our entry and then just start droning along in here. And what the PSAR does is it, instead of just being a trailing stop, which would be here, and the longer you're in the trade, the less and less you believe in it, but the trailing stop is still way down here. And so even though you have less conviction in this thing, the trailing stop remains in place. But a PSAR, because it has an acceleration factor and a time component, gives this a certain amount of time and says, you have to make a move in this time period, or we're just going to time stop you out in some kind of measured step function. That's what the PSAR does. Now, the limitation of the PSAR is that if you get that really positive move and the trailing stop accelerates, the PSAR gets stuck way down here and you start running at risk of this stuff. So a fourth way that we might do this, so if the third way was the PSAR, a fourth way might be a PSAR plus. And we might just say, look, we recognize that the PSAR is going to be great when this thing is sideways and quiet. But we don't want to too quickly get a parabolic and then get stopped out too soon. So what we're going to do is we're going to put a PSAR. Then if at any time during this move, when it flattened out and then jumps a level, we might just say, I'm going to use this moment to accelerate my stop like a sniper and just move it straight up until such time as the PSAR catches up to it. And then we'll just follow with the PSAR. So this act of a little sniper, that's what I mean by PSAR plus a sniper, gives you the benefit of both of this. But that gives you, now I have to use some judgment. I know the mathematical rules for the PSAR, but what are my discretionary rules for the sniper? You see that combination of manager and sniper when we use the Wu Wei exit. So the Wu Wei exit in the SSC intraday specifically has, after you move to no lose plus dinner for 2, as soon as the Bollinger Band mean picks up, then the manager just uses Z0, or the Bollinger Band mean. And then the PSAR usually is ahead of that. And so at some point you decide, I'm going to use the PSAR. I'm going to use the PSAR for my sniper. So I take half the position with the PSAR and half the position with the manager, and I get some kind of average in between those. And so I can make the sniper purely my emotions and my intuitions and the way I'm reading price patterns. Like if I saw it move 2 bars north of Z2 and then starts to roll over, that might be good enough to activate a sniper because I saw a special case. And then the manager is purely mathematical, so I have no discretion. And what I've done is I've given my discretion 1/2 and the rules 1/2, and I'm happy to take the blend of both of those. So the Wu Wei exit then is one particular way in which we might use a combination. That's a special form of PSAR and sniper. Now, the final thing I want to say on this is the Wu Wei exit, to me, is the best trade-off, because it just keeps this thing wide enough and says, especially because in that we're using an MMRB already. That's a very tight stop. So any kind of price action that's wiggling around in here is all noise until I get some kind of PSAR activity that gets me above my entry, like 1, 2, 3 PSAR dots. I'm now going to say, all right, this thing has just moved that far off the low, or where the price was that was going to get me short, like in a collapsing dragon or something. This was the price that invalidated it. Otherwise, this is all noise. So I'm just going to keep that in place until I have clear evidence that this thing has moved in my favor. Then I'm just going to jump it to here and leave it in place. And what I've done is I've locked in, no matter what, I've locked in my case, $100. No lose plus dinner for 2, which for me equates to a 0.25R win. And then it's just a science project. How much am I going to win? Then what I'm doing is I'm waiting to see the Bollinger Band mean pick up. And as soon as the Bollinger Band mean, because remember, I'm usually buying after a winter, and then the Bollinger Band mean comes along and made some low. When the Bollinger Band mean has reversed the slope and is now coming up and takes out this locked-in science project, remember, this thing was working, and there was good reasons to believe that it could go all the way up to whatever that price target was way up here. And so all of this stuff north of the Bollinger Band mean is just goodness. That's that good idea that was baked into the cake, just manifesting. Once the Bollinger Band mean, though, is above my science project stop, I'll just pick that one up and say, look, as long as this thing is above average, I'm good to go. And that can just be my manager's rules, that as long as this thing is above average, then we're just going to monitor it and trust. And then when price comes back and violates the Bollinger Band mean, I'm out. Not even any discretion, because I've committed to the logic of what that Bollinger Band mean looks like. Now, sometimes those gains are so good that I'm not willing to give back all of that move all the way back to the Bollinger Band mean. Like, that's where we are right now in the market on SPY. That thing was so good that you've heard me talking about, instead of letting it come all the way back to Z0, like this was yesterday's move, I said my stop is going to be just below the 1-day low and no worse than the 2-day low, because I was not willing to give back all these gains all the way back to the Bollinger Band mean. And that's only because this move was a super move, and it was super good, extraordinary. And so I didn't want to give back the outsized gains. Well, that's a sniper decision to accelerate my stop to some level that is driven by all this price action. And that's a decision that I make of how much of it is mine. So in the case of a Wu Wei exit, where I just leave it in place and then jump it up to plus 100, I'm basing that on the fact that I saw 3 PSAR dots above where I entered. I don't even care, where it is up in here. It's really just the fact that I had 3 pieces of evidence that my initial risk was here, and that's how much noise. It's moved 3 bars of signal out of this noise, and so I just want to lock that in, and it turns out that that's 0.25. This thing may or may not have gotten to plus 400. What I want to say is that may only have been 200. And so price action gets up in here and maybe starts to falter at every moment in the curve, at every moment after that entry. That's my max gain right now. That's money that's on the table. And so how far up the stack does this have to go before I just decide, you know what? I'm not even going to wait for the PSAR to go 1, 2, 3, and then move this up here like this. What if, just humor me, what if right after the entry, that thing did this and then started to tail off? You tell me when you want to stop. If I saw something like this where I had plus 400, I might, instead of waiting for the PSAR, I might just say, you know what, screw that. I'm just going to lock it in, and I'm just going to lock in that much. And then whenever the Bollinger Band mean comes around, then I'll pick up the Bollinger Band mean. So this is like a sniper action, deciding, hey, I'm just gonna lock this in now. I saw that amazing move to here, and it started to roll over. I'm just gonna lock it in instead of waiting for the Wu Wei. Now, to do this, to make this, means that you have to pay attention. And I choose that word carefully. You have to pay attention, meaning that there is a cost in terms of time and effort, and there's some cognitive cost, and there's some span of control. Or you might just put a rule that says, when price is moving up, I'm going to have a PSAR exit and a Wu Wei exit and a trailing stop exit, and I'm going to take the highest one. And you could mechanically program that. That's what Alex Ressos is doing with some proprietary software that he's doing. To me, the best form of this is the Wu Wei. I just live with that. I'm happy to live with the Wu Wei because it gives it plenty of time to make the move, and I'm not squirreling around in here which I've already defined this as a noise level. The MMRB is the smallest box that I can draw that's still manageable. So until I get some actual evidence that this thing is in my favor, I just keep the price, I keep the stop there. I make one decision to lock it in. I keep that in place until the Bollinger Band mean goes. It takes me zero effort to think my way through that. And so I could have 5 trades going on at one time, simultaneous, 4 trades simultaneously, and the Wu Wei exit tells me where I'm supposed to be all the time at no effort. I'll take that all the time. So what I want to say then is, when maybe this thing only got to, in my case, maybe it's at plus 200. Maybe this thing has moved up and it's at plus 200 and is going sideways. And maybe that was enough to get my Wu Wei exit in here, and I've locked it in. So now there's only $100 worth of risk inside that little, that's how much noise room there is. But I don't care, because my entry was here, and now my stop is here. And I've locked in this much gain. So I don't care what it does in here, because I'm not going to lose money on that trade. And I've made a very simple set of rules that gives me that move. So it's in, up, over, and then Bollinger Band main. Very simple. So the only thing I'm concerned about is that I moved it too soon. Well, here's what I'm going to tell you on there. If you got your risk is out, and you moved it to no lose plus dinner for 2, and it took a hit, you got paid $100. You moved it to no lose plus dinner for 2, and it took a hit. You want to then got paid $100 soon. Well, don't worry about making $100. You should be worrying about, what are my rules for re-entry? If this thing only came back and took off again, if I'm not getting that re-entry because I'm not in the zero state, that's what your concern is, not when should I move it up here or not. That's a simple decision. The effort you should be putting in is, how do I re-enter? How do I re-enter? And that will eliminate that question about moving things too soon. Because you get in, you get out, you make $100. Oh, you get back in. Simple. So what? If this thing goes up and comes all the way back down and kicks you out, you're short. Even then, you're not even thinking about it, because this was by definition, on our patterns, this thing was a critical state, and you were going to buy it or short it, because this is probably a collapsing dragon, because there was some extraordinary move down which stabilized, which said, oh, maybe it was an overreaction, so now I can go long when it corrects. Or no, that thing just paused, and now it's going to be another big move down. Bang, you're short again. So just treat this thing like the noise that it is. It's just noise. So to me, once I've established what that stop is, I'm not going to move my stop until it has moved 3 PSAR dots out of the noise box. Then I have some evidence that I can lock it in. And oh, by the way, I locked in my I locked in my $100. Now, if this thing goes against me and I take a -1 execution R, I have lost minus 0.2 position sizing R. So 3 losses of 0.2 in a row. Does that consume all your trading capital for the day? Well, maybe it does. But I would tell you, if that's the case, then $400 of risk per trade is too much. I'd go to 100 so that you can take 8 trades before you exhaust that. Because none of this architecture has anything to do with the dollars at risk per trade. Whether it's $1,000 or $10, none of this trade geometry changes at all. And none of the R multiples change at all. The only thing that matters is the actual dollar value of the particular trade. So if 3.2 losses in a row consumes your trading capital for the day, cut your dollars at risk per trade in a quarter. Cut it by 75% so that you can get enough chips to be able to play, so that each trade isn't such a big magnitude in your head. That'll reduce your risk. Once you get the architecture down and you get some R multiples to study, you can then start scaling up the dollars at risk per trade. So just wanted to clarify that. All right. So the today's market, the move just keeps going. It closed near the low of the day, and like it has the last 5 times in a row, a sell-off, a intraday low, or when it closed weaker than the opening, was seen as a buying opportunity. There was a small gap up and then finished strong all day to make a new 10-day high and a 30-day high. It closed still at Z2. The dragon is still tracking the Z1 line nicely. Baby dragon has given us support. The slope of the 30 is very strong, long and strong. And to the upside, the next target is 362, which is Z3. There's 0 resistance above. There's nobody that bought it way back when that as soon as he gets back to break even is going to exit. So that's not even a thing. By the same token, the strength of this trend by ADX14 is now a Z-score of 2.3. So this is an extraordinarily strong move. Even just the 14-day move, which is that much, has a Z-score of 2.3. Extraordinarily strong. Now, the last time that price spent hovering on the Z2 line was here, and then that was followed by 5 or 6 days of sideways. And then down here, when it pushed to Z2, it gave us 7 or 8 days of sideways before it resumed. So it would not be unusual to see this cool off and remain stuck in between the Z1 and the Z2. So that could very easily be the case. And so if it were to stay stuck in this range here between 343 and 352, an $8 range, which is like 2.5%, that would be absolutely normal. That would not even be a surprise. That would be more like what we saw back in here. So there's a 2.5% range that lasted 11 days. And here's one that lasted 8 days. So this thing moves up in stages. Here's one. Here's a price box. It hasn't even started a new price box, but if it did, if we just went $2.50 from the swing high, that's why, to me, as you're thinking about where to place your stops, with that being the extreme boundary, to me, Z1 is sort of the limit of what I would take. To me, that's rock solid. Keep that, because you're still giving back 5 full days of gains. To me, I'm looking at 349 here. This is where I would put it. I'm giving it a 1%. Yesterday, I told you I was here at 347.8. I've raised that now to 349. I'm looking like a 2-day low. I can't see a justification for letting it come all the way back to the 10-day low in the Bollinger Band mean, all the way back here, and give back 20 days of gains. What that would be is essentially saying, hey, that 14-day ADX, which had a strength of trend of 2.3 Zs, meaning that you only should see that once a year, I was willing to give all of that back. Not me. I'm willing to give back. I want to keep this much. That's my money right there. My money. Locking that in. So I'm only going to give it this much playing around space. Other levels you might choose would be like the upper skin of the dragon, 347.75. Spine of the dragon, we're essentially where I am at about 345. Skin of the dragon and tomorrow's PSAR, 342.7. Bollinger Band mean, 335. Z-1 and the peak fair value, 326.3. 30-day low at 319. I mean, I couldn't imagine living with myself if I gave back that much. That's almost, well, here's a 5% sell-off. That's basically a 10% sell-off. And this is the current long-term fair value. This is how far ahead of fair value this crazy move has become. So I know a gift when I see it, so I'm locking in that much. I'm not giving that back. I've said that enough. Sorry to keep beating that dead horse. But I'm really talking to myself on that one. And every time that I want to, well, give it a little more room. This is awesome. Yeah, that's me engaging in self-talk right there. All right, let's look at what worked today. So the S&P up 0.9, diamonds up 0.88, treasuries up 1%, and then the Russell up about 1.15. So a pretty tight cluster on the 4 elements of the U.S. market. So let's see what led the way in terms of sectors. So discretionary, so S&P was 0.9, discretionary was 1.1. The VIX, even though the market's going up, the VIX continues to go up, 1.5. Then a nice cluster in here of emerging markets, 1.7, tech, 1.9, and Mexico, 2.4. And so when we multiply XLK times 3, we would expect to see TECL at about 5.7-ish, and there it is at about 6%. That's the triple broad tech. Here's the triple NASDAQ. So today, triple broad tech was a little bit better. So Mexico rebounded nicely from a critical state. Made a nice intraday hybrid frog play. It was sweet. XLB, the materials, up 2.8. Clean energy, 2.9. Brazil, 4.1. That was a nice intraday trade as well for the hybrid frog. So the frog champions just do what they're supposed to do. On a day when the market's up 1%, they're up 2.5% to 4% and very directional. The companies that made a difference today, well, there's the FANG companies, 1.3. So Amazon, 1.4. Twitter, 1.4. And I'm going to show you a 30-hour trade on that one intraday here in a little bit. Alphabet, 1.6. This one, PSHZF, is a hedge fund, a publicly traded hedge fund by billionaire Bill Ackman. So I'm starting to track that one because you can buy Bill Ackman's positions. He's pretty smart. So I'm tracking that one. Nucor, Caterpillar, and Cliff in a nice tight cluster here along with materials. Although they're good, they lagged the material sector just a little bit, but that's good. Salesforce, 3%. Alcoa, 3.2. Walmart, 6.3. NVIDIA and Apple, 3.3 and 4. And so they were contributors to the broad techs. Now here are the laggards. So the S&P up 0.9. Finance and Japan only up 0.3. Silver and XOP, that's the oil exploration, down a third. Energy, Wheaton, and healthcare down 0.67 to 0.9. Now individual companies that lagged. Microsoft, Facebook lagged at only 0.7. Nikola and Devon at 0.5 and 0.4. Home Depot and Goldman lagging at 0.3. Boeing, Oil, Intel minus 0.3. So Intel, hat tip to Pavel. He observed that on the daily report, Intel was an overreaction short, and that made a perfect intraday hybrid frog short. So swing trading at one day at a time with Intel was sweet. U.S. Steel bucked the trend of the XLB by losing 0.4. Cisco lagging at minus 0.45. Simon Property, commercial real estate, minus 1. Wynn, minus 1 and a third. Virgin Galactic, minus 2.7. Tesla down 4.6. So should be stock, if you have any belief in Tesla, should be stocking for a fire sale, right? So in the battle of the splitters, Apple was up 4%, Tesla down 4.6. I almost think Tesla missed the opportunity to do a 10-for-1 split to get their share price to 100 for the illusion of the liquidity. All right, so I want to take a look at some of the intraday trades today. Whoops. Got too far. That was this one today. Yeah, okay. So the first one was in tech. I am heavily invested in tech on the swing trade. As you know, I've got 6 positions in that were paid for with turbo trades along the way in TQQQ. So that is always my first look these days. And so I see it closed here. And then gapped up to here, and then sold off. Sorry. And then sold off sharply to here, right? And when I say sharply, I just mean all it did was capture all of the aftermarket that we're just going to buy on the open. So everybody that loved tech yesterday using end-of-day data said, I want to buy at the open before it runs away from me. So they goosed up the price this much, sold it off to see if they could run their stops, and then spent the rest of the day going up. So that's not even unusual. That is the least surprising move of all. I mean, if you think about it, that's taking advantage of the retail trade. So what we'll notice is that yesterday during the idling time, that's the Z3 pinch box. So I bring that over to here, and after the sell-off, it now moves up that far off the low, and it's crossing the VWAP, and it just took out yesterday's dragon hump. So that's an automatic buy. And the Wu Wei exit now. Is here, and then by the third dot, so there's 1, 2, 3, and it's crossing the VWAP. Automatic. Leave that in place until now here's the Bollinger Band mean. So the Bollinger Band mean is just cruising along. And now it starts responding. And right here is where the Bollinger Band mean. Now notice how it has moved from the middle of the noise box, has now taken out my entry my PSAR stop. So I just want you to notice that at the moment of entry, the PSAR was here and the Bollinger Band mean was there. And then here, here's where the PSAR accelerates and crosses the Bollinger Band mean. And then the PSAR gets above the entry here, and there's the 3 dots. And meanwhile, now the Bollinger Band mean picks up the hunt and starts tracking all the way up. So now my managerial stop is simply the Bollinger Band mean. Now, I saw this. I saw one. Oops. Make that green. Sorry. We should be able to feel this. So I feel green, and green 2 legs up. So I feel one pull back, which came almost all the way to the PSAR. And so now this thing starts pulling back again on the second leg down. And that's enough for me to activate the sniper exit after 2 legs up. Take half the position on the sniper. Meanwhile, the managerial exit would be here, but that didn't get hit, and it wouldn't have been hit till way over here. But I take the sniper exit on half the position, it immediately reverses, takes out the previous high. So I just put that half back on. And then now here's the third leg. And here's the retracement again. And now this is enough to get me out of the whole position because it's given me 3 legs and 3 significant pullbacks each time. And that just felt like enough. And then I look at this whole thing as, the first leg up. And so now this one could be the start of the next leg up at the next higher time frame. So this one comes all the way back through the Bollinger Band mean, comes down to Z1, and then gives me a supported fall crossing. So just re-enter with the standard risk box, the same box here as here as here. This one was even a little bit tighter because I just used the PSAR. So now my Wu Wei exit here at three dots above. And I just take half the position with the sniper and half with the manager on that leg. So that's just right by the numbers. And I just want you to observe the re-entries for sanity. That is so routine here and here that I just keep playing it. And then the size of the wrist box. And then this typical shenanigans at the open. And sell off. It found support where it found support yesterday. Nothing to see here. Orderly move above the VWAP. Just buy it and then manage it. All right. So that was the cues. That did even better the rest of the day. This is EWZ. It had sold off horribly yesterday and gave us this wrist box. And then it jumped up to here. Sold off momentarily, and then went one wrist box off the bottom. When I say wrist box, this size of a box, which is 20 cents. That's a normal managerial size stop in EWZ. So it crossed back above the VWAP. Buy it. Here's my stop. Now, because it is so far away from yesterday's price action, I was calling this a modified VWAP stop. So what I looked at here was, at this point, it got to no lose, or just a little bit above my entry. I decided at this point to raise my stop to the VWAP and then just track it with the VWAP until I got something like the more orderly flow. So I was just playing the VWAP the whole way, and from about from 9:30 to 10:30 to 11. So that's the first 90 minutes. I was just using the VWAP. That as long as the price was above the VWAP, I was okay. And then everything north of this yellow box is the science project. I'm not going to lose any money on this. As the day unfolds, this is that same 20 cent risk from 30.50 to 30.70 and what it looks like with a little more compressed. And so recall, my stop was right in here along the VWAP. And then this time it came down and was threatening the VWAP, so I just took it. So I made bank on yellow, or on green, and gave back the blue box. It didn't fail any further. In other words, the VWAP continued to be support. And we got the spring crossing, so exit and re-enter. This is about 6 or 7 bars later. There's your PSAR. So I'm using this in this case I'm using a 10 cent from 85 to 95, about a 10-cent stop. And I just make bank on a fraction. It comes down to find support at the VWAP, crosses, buy it. Oh, it doesn't fail. Where it should have failed, it didn't. So it took out the previous Z3. So buy a second position. It starts running away with me. At this point, I've locked in this much. And so, the stop is about where it should be anyway, just based on the managerial stop. You can see that the Bollinger Band mean has been my friend the whole way through. That's the dashed line here. And all I did was just lock that in. So we got two positions in hand, 1 and 2, and we've locked in 10, 20, 30 cents on a 10-cent risk on the first position and 15 cents on the second one. So that's almost 5 execution R locked in, free and clear. Oh, I'm sorry, that's the same one. And I forget what we ended up getting on that. It was pretty good. This one was Mexico. And what I want you to, I was really busy with Brazil and Twitter and TQQQ. So my span of control kept me from trading around on this one. But what I did manage to notice was that it had spent this entire range, all the way through here, was all above the VWAP. And I noticed right here at 11 o'clock Eastern, we had a break of the VWAP, and then I observed it sell off this far. Well, and then it started to go sideways and then took off. Well, the fact that it would go that far was not surprising. Okay, so we should be back. Double checking audio. Mic check. Okay, good. So we're back. All right, so here's a technique for you, that once it breaks below the VWAP, where it's been all morning above the VWAP, and now here's where it crosses below the VWAP, I don't know how far down this is going to go, but what I do is I go check backwards and I say, here was the peak of maximum stretch from the VWAP during the morning. This is how strong the traders were in being able to move this thing north, right? So all I do is I measure that distance, the degree of stretch. That's how much power they had to move it away. And then I just bring that over to here, and that's where this, that's where this red arrow comes from. So if that's how strong the traders were at moving this thing north, the green arrow, then if this went the same symmetrical distance from where it crossed the VWAP down to here, I'm not allowed to be surprised if that's the case. And in fact, that's what it does. And then you'll notice that we get the bottoming here of the RL10, crosses the baby dragon. That's the alert. Remember, this is your harsh winter. That's the alert. Changes to spring, crosses the dragon, PSAR flips, automatically buy it, put your Wu Wei stop in, wait for it to get 3 dots above your entry, move your sniper exit up to here, move it to the Bollinger Band mean, or wait for the Bollinger Band mean to catch up. See, look how the Bollinger Band mean, it was down and then it bottomed out. And when it finally starts resuming, you can now start believing that, hey, maybe this thing has some weight behind it. It made the river move. And now the Bollinger Band mean simply just keeps tracking and tracking and tracking. As long as price just keeps going and going and going, so what? So get the first position here. Second position after this little pullback doesn't even threaten the PSAR or the Z1 or even get through the dragon. And then it takes out this little hump and crosses the VWAP and second position, because we've got 3 execution risks in hand. And then it does nothing but zoom straight up, and it gets to the same price level that it failed before momentarily and then resumed. Third position. It took out the previous hump. Third position. Gives me a Z2, 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 3 more, couldn't make new highs, starts to exit, enough, all out. So that is so the first position on a risk of 5 cents captures 30. The second position captures from about 20, so that's 50 cents. And the last position captures 5 cents. So that's 55 cents divided by 5 cents is 11 execution R. And this wasn't even the big trade. So 11 execution R on an unsurprising move equates to 2 weekly position trades, position Rs. So that trade made a weekly gain of 2R, because I want to net 2R a week. That's a 2R weekly net right there. I made the week on that sequence in Mexico. All right, so here's Twitter. Z3 pinch. Here's a Z3 pinch. I played the Z3 breakdown, so I'm short with my stop at the PSAR in the usual spot. It gives me 2 bars and then reverses immediately. It comes to the VWAP. I just take the half of an execution R loss. Stop and reverse. That's fake 1, go 2. And here's my Wu Wei exit. First position works. By this time, it's taken out the previous Z3 expansion. So I add my second position because I've got 2 risk units in hand. It keeps going. This little pullback never even got through the Z1. At this point, I've gotten through yesterday's close and today's open. That's what those 2 dotted lines are. So why not? Third position. It makes a pullback and goes. Fourth position, because why not? And at this point, I go ahead and lock in from 430, from 35 to about 80 is 45 cents on the first one, 30 cents on the second one, so that's 75. 15, that's about 80, 85, call it 90 cents on a 7. That's really 5 cents, but let's just call it 10 cents. So that's 8R-ish locked in with 4 positions in hand at a price of 40.80. And then we're going to get another 30 cents on 4 positions. So another $1.20 on charitably a 5 cents of a risk. So I'll just make that 10 cents so that it's believable. So the way this thing finally works out, there's our, oops, let me get my arrow going. So this was our fake one, lose a half of an execution risk. Fake one, go two. There's the 4 entries. And that thing ran all the way up to 41.20, so it was 40 cents more than what we just saw. I take the sniper exit on half. I take the other half here, and then it doesn't fail further. So I re-enter here in the usual spot. I just treat that as a winter, and I re-entered with 2 because this one was 30R, so I felt like it was okay to risk 2. And then this ended up going up into here, and we made a little bit of money on the chop that happened after that. But that's what 30R looks like, and that's using 10 cents. But I want you to know that on a 5-cent risk, which was what the PSAR was, that would be 60. So I'm just counting it as a 10-cent initial risk and calling it 20. But now you can see the importance of fighting for nickels and engineering the initial trade on a single position and then trying to get that quickly to no lose plus dinner for 2, so you can start building these positions professionally without your core capital at risk. Boy, I just can't say that enough. So if this was honestly 60R, that's 12 position sizing risks. That's technically 6 weeks worth of gains on that trade, which lasted 3 hours. Ladies and gentlemen of the jury, if you see what I'm saying there. Walmart, this was the big percent winner of the day, and this is just the first morning move, which I didn't even have time to take because of the other ones. But you can see that Walmart was a big winner yesterday, and in the news, Walmart announced today that they're going to do a $99 a year membership that gives you free delivery and a bunch of perks and goodies and all that jazz. To directly compete with Amazon. They've taken off the kid gloves, and they're going to battle. And so Walmart continued to build on yesterday's gains. So here's an opportunity for you to look at, here's the pinch box from yesterday. So there's the hybrid frog move off the bottom. So technically, there's your entry, either there or there. And there's a Wu Wei exit right there. And then a re-entry here. And a Wu Wei exit there. And a re-entry here. And a Wu Wei exit there, with the possibility of a sniper if you had wanted to in here. I mean, guys, this is just like hydraulics. This is just the river flowing and getting paid. So here's a gain. There's a gain. There's a gain compared to your initial risk. These things add up. So that's 3 execution R on a single position, and there was more available later during the day, but that just takes you through the morning up into lunch. So that's what a 50R day looks like. Every one of them looked the same leaving the station. And Twitter was not even an abnormal move. So that's what I want to say about that. It's 9:40. I'm going to leave the daily report for you to review. And let you get on with your prep, because I took a little longer today. All right, guys, that's everything I got for you. Take good care.